Now, the first question, when you're thinking about sufficiency, is, okay, how much do we need to be sufficient?
Right.
And, you know, as we said, it's a subjective decision. There's a little bit of a value judgment in there. But one of the first things is, well, how much are you spending? Okay? And how much do you need to spend in order to do what you need to do? And then how much more on top of that do you need, you know, to pay yourself, to, you know, live, to rent and food, or, you know, all of those things. And what you can do is actually start to map that out and just, you know, take a piece of paper and go through your business and see where you're spending and where how much you're bringing in, what those rates look like. And what you're looking for is, this is actually a form of financial goal setting called target monthly income.
Okay.
And it's basically, how much are we spending and how much do we need to continue to spend in order to keep operating?
Makes sense.
How much on top of that do we need to compensate us for all, you know, the work and the time and the energy to make it worth it to do what we're doing? And then how much as a total do we need to bring in each month? Or, you know, just like any time sequence, you can take this to a week or a day or you know, whatever. I don't recommend doing it a year because that's too long. You need to look at this on a regular basis. How much do we need to bring in on average in order to be sufficient?
Okay.
And then that gives you a really clear goal, you know, from a business finance standpoint, because like if we reach our target monthly income, we are sufficient. Anything on top of that, we're great.
Awesome.
Yep.
Okay.
If we're below our target monthly income, we have issues that we need to address. And so it's a really nice kind of binary way of asking yourself the question, are we sufficient?
I think it's a nice way to set goals too, because particularly with financial things, it's very easy to get trapped in that I want to make as much as I can.
Yep.
And it's a good way to at least feel like you've achieved something.
Yep.
You know?
Yeah. And you know, it's target monthly income, and this is the thing, like, it's never static. Okay? So anytime you're spending more, you know, anytime you're making more, like this is a process where you have to be constantly comparing how much is coming in versus coming out on a given time period. But as long as you keep adjusting it, it lets you know whether you're on track to doing what you want to do or whether you're not. Okay. And, you know, it's a nice, relatively simple thing to do. You know, total expenses, total income over a certain period of time. Are we making more than that? Yes or no? And then, you know, you can project that, okay, for the next time period, how much are we going to be spending?
Right.
And then this actually works very well with a concept called mental simulation, which we'll be talking about when we get to the human mind and how to work with yourself. You can start, you know, so for example, you know, round number, if you need $10,000 a month in order to be sufficient, then you can use that as part of your planning process.
Okay.
What would it look like? What would have to be true? What would have to happen if we brought in $10,000 this month?
Okay.
And you can start planning from there.
Cool.
But your target monthly income number is the point at which you reach sufficiency over that time period.
Makes
Anything
sense.
less is bad, anything more is good.